All right, welcome to this explainer. We're going to dive right into the absolute sheer scale of the wealth being generated by the AI boom right now. And, more importantly, the impending historical choice of how that money is inevitably going to be redistributed. We are standing at this crazy intersection of an unprecedented technological windfall and a looming societal reckoning. So, our goal today? We're going to look at the hard data, the shifting cultural attitudes in Silicon Valley, and the historical precedents that show us exactly where this tension is headed.
Our narrative actually kicks off at a recent tech festival in Athens with a pretty prophetic quote from Neil Reimer. He was doing a sit-down conversation reflecting on the massive wealth piling up around artificial intelligence, and he pointed out that a huge redistribution of tech wealth is absolutely certain to happen. He literally said, it'll either be voluntary or it'll be involuntary, but it'll happen, and I hope it's voluntary. Now, if you heard this from a typical politician, you'd probably just brush it off as standard issue populism. But coming from Neil Reimer, that is a striking public statement.
To really get why this matters, we have to look at who's actually saying it. Reimer is not some outsider looking in. He is an absolute insider. He's the highly successful co-founder of Index Ventures, which is one of the top venture firms of the last 3 decades. I mean, they've raised roughly $15 billion, and last year alone, just from exits like Figma and Wiz, the firm netted a reported $9 billion. Plus, Reimer is a major philanthropist himself. He recently gave $13 million to McGill University, and he sits on prominent nonprofit boards like Endeavor Greece and Human Rights Watch. So this is a direct beneficiary of the tech boom stepping out to warn his own peers.
And this perfectly illustrates the exact fork in the road we're facing right now. We basically have 2 choices. Path A is voluntary philanthropy, where today's tech titans choose to distribute their fortunes on their own terms. And then there's Path B, involuntary taxation, where governments are forced to step in and literally legislate the outcome. The tension between these 2 paths, that is the absolute core of our explainer today.
Section 1. The AI wealth boom, a staggering scale. To fully grasp why this tension is building so rapidly right now, we first need to comprehend the sheer, unprecedented scale of the wealth we're talking about here.
Let's start at the absolute top. Just last month, following the SpaceX IPO, Elon Musk officially became the first person in recorded history to reach a net worth of $1 trillion. $1 trillion. We aren't just dealing in billions anymore. We've officially crossed the $1 trillion threshold for a single individual.
But hey, it's not just about one person. According to Forbes' 2026 rankings, the current AI boom has minted 45 brand new billionaires. The gold rush of artificial intelligence is creating vast fortunes at just an unbelievable velocity.
Together, those 45 individuals hold a staggering combined wealth of $2.9 trillion. And the crazy part? What you really need to take away here is that this wealth is calculated before heavyweights like OpenAI and Anthropic have even gone public. This is literally just the early stage of the wealth creation cycle for AI.
To put this astronomical wealth into a tangible, real-world perspective, Business Insider recently ran some numbers on what happens when those 2 companies actually complete their IPOs. Once that liquidity hits, their combined employees will hold enough wealth to buy nearly a third of all homes in the entire San Francisco metro area. Think about that. Just think about the sheer economic density of that outcome. It is a localized concentration of wealth that's almost hard to wrap your head around.
Section 2. The decline of philanthropy, the failing voluntary path. Now, with all this capital piling up, you might expect a golden age of giving, right? But despite this mountain of cash, we are actually seeing a stark failure of Path A. Voluntary philanthropy is rapidly falling out of fashion in Silicon Valley.
The data tells a pretty striking story. So you remember that Giving Pledge, started by Warren Buffett and Bill Gates back in 2010 to get billionaires to commit half their fortunes to charity? It was supposed to be the ultimate voluntary redistribution tool. Well, in its first 5 years, 113 families signed up. Great, right? Then it dropped to 72, then 43, and in all of 2024, just 4 isolated commitments. That is a steep, undeniable drop-off in the appetite for traditional billionaire philanthropy.
And I want to be super clear here. This is not just a billionaire problem. The broader data shows a massive cultural shift happening. While total American charitable giving did hit a record $592.5 billion in 2024, the actual number of individual Americans donating has fallen for 5 straight years. Back in the year 2000, 2/3 of U.S. households donated. Today, it's roughly half. Even affluent household giving slipped significantly, from 90% in 2017 down to 81% last year. The reflex to give is just declining across the board.
We can actually see this playing out vividly inside the AI boom itself. Take Anthropic.
This is a company with deep ties to the effective altruism movement, and they generously match employee donations up to 25% of their equity. You think their newly wealthy employees would be heavily focused on philanthropy, right? Actually, scratch that. Financial planners managing these exact windfalls report that young tech workers are mostly ignoring that philanthropic match. Instead, they're favoring angel investing and starting their own companies. The desire to build new businesses is simply outpacing the desire to give the money away.
This cultural shift away from traditional charity is perhaps best summarized by a recent New York Times report about Elon Musk, noting his belief that his for-profit businesses themselves are his philanthropy. And that's really becoming the prevailing mindset in the Valley. People increasingly feel that building world-changing technology is a much higher form of public good than just writing a check to a charity. Section 3. Involuntary redistribution, legislating the outcome. So because the voluntary path is faltering and the wealth keeps piling up, legislators are stepping in with highly controversial plans to force the outcome instead.
The specific mechanism being proposed right in tech's backyard is fascinating. This year, California voters will decide on a 5% one-time wealth tax directly targeting the state's billionaires. Unsurprisingly, this has triggered intense debate. Economists warn that these kinds of taxes historically cause the wealthy to simply pack up and leave, and we're already seeing it. Google founders Sergey Brin and Larry Page have already moved their primary residences to South Florida. Even California Governor Gavin Newsom has voiced opposition to the measure, which really illustrates just how politically fractured involuntary redistribution can be.
On a federal level, we're seeing entirely different but equally controversial ideas. OpenAI has reportedly discussed handing the U.S. government a 5% equity stake. CEO Sam Altman frames this as a way of sharing AI's incredible upside with the American public. But of course, critics argue this is simply a cynical maneuver, basically a way for a massive corporation to buy political cover and regulatory favor in Washington.
Unsurprisingly, Silicon Valley is fiercely resisting these forced measures. The idea of putting Uncle Sam on the cap table or facing unprecedented wealth taxes goes against the very DNA of the tech sector. This sentiment was perfectly echoed by veteran investor Roloff Botha, who recently quoted Ronald Reagan's famous and pretty humorous warning about government intervention. It perfectly highlights the deep skepticism tech leaders hold toward any bureaucratic attempts to manage their wealth.
Section 4. The Gilded Age Parallel, Historical Precedents. To really understand where this political tension inevitably leads, we have to look objectively at history. We are currently living in a moment where the top 1% of U.S. households holds a record 31.7% of the wealth. That's a number not seen since the Federal Reserve began tracking it. But the extremes at the very, very top, they actually mirror another era entirely. Renowned economist Gabriel Zucman calculates a really fascinating comparison. At the height of the Gilded Age, around 1910, America's 4 largest fortunes held 4% of the U.S. GDP. Fast forward to today and look at how that's evolved. A tiny sliver of just 19 households commands a staggering 14% of our GDP. The concentration of extreme wealth today is actually more potent relative to our overall economy than during the entire era of the robber barons.
Historically, we can see exactly how this exact same tension resolved back then. In 1889, Andrew Carnegie tried Path A. He published The Gospel of Wealth, arguing for voluntary philanthropy and calling it a disgrace to die rich. But it wasn't enough to ease the public pressure. By the mid-1930s, populist politicians like Huey Long built massive followings by demanding involuntary wealth sharing. Fearing a massive political uprising, Franklin D. Roosevelt pushed through Path B, the politically forced soak-the-rich tax, which pushed the top marginal rate to a staggering 79%. So history shows us that when voluntary giving fails to relieve the pressure, forced redistribution arrives with an absolute vengeance.
Section 5. Tech's Moral Center, a Shifting Reputation. This historical echo brings us directly back to the moral center of today's tech industry and the deeply troubling shift that Neil Reimer, the guy who started us on this journey, is witnessing firsthand within his own family.
Reimer points out a pretty heartbreaking cultural shift. He recalls being a Stanford undergrad back in 1984 when Apple discounted the first Macintosh for students. Back then, Steve Jobs and his co-founders were viewed as absolute heroes, building something genuinely good for humanity. Contrast that to today. Reimer listens to his own children discuss modern tech giants with the exact same disdain historically reserved for defense contractors or cigarette makers. The halo has severely slipped. As a massive beneficiary of this boom himself, Reimer truly hopes his peers will recognize this shift and voluntarily share this unprecedented AI windfall. Which leaves us with one huge, lingering question to ponder as we wrap up this explainer. Knowing exactly how history played out a century ago, Will today's tech titans choose to give the money back the easy way, or are they going to wait until history chooses the hard way for them?